nfa.gov, and you want to look for something called excess capital. Whoops, that's supposed to be an A. Excess capital. Excess capital will show you how much money they have that's outside of your customer account and everybody else's, and is a good indication of whether or not they can weather a storm. I'm not clear how we can have an expectation of 2-to-1 profit over loss in some of the example trades you've given on the website. I've dealt with this in a lot of other places, but I'll answer the question again here. The 2-to-1 ratio is a guide to keep you out of getting in trouble. Remember, we can't predict the future. So to come into the market and say, okay, I'm absolutely going to get out at 2-to-1, or I only take trades that are 3-to-1, or I only take trades that are 4-to-1, that's a ridiculous statement. How do you know that it's a 2-to-1 or 3-to-1 or 4-to-1 trade until it's over? Okay, there's no way you can know that ahead of time. The system vendors have done a very good job of clouding our judgment and clouding the words that we use. Okay, so 2-to-1 ratio is a gauge. In other words, if I'm going to get into a trade, say here, and I'm going to try and go long, well, look at how close resistance is. Okay, and look at how close resistance is up here. Probably not a good idea to go long here if resistance is so close. So how do I define close? Well, it's 2-to-1. Okay, if I'm looking to go long there, and I can see that from this point to this point is 63 pips. Okay, if it's 63 pips, then I just divide 63 by 2, which I've embarrassed myself enough doing math while I'm recording. So that means I can only risk 31.5. Well, then that means I need to go into the market and see, does 31.5 make sense? I don't want to just place my stop at 31.5 and hope everything works out. Okay, so 2-to-1 is a gauge. Remember, it's just, I wish I could strangle some of these guys sometimes. There's no way we can predict the future. So it's absolutely ridiculous for somebody to say, well, my system generates trades that are only 3-to-1. No, what that means is over 100, 300, 500, or 1,000 trades, the average works out to be 3-to-1. But I can guarantee you that not every trade is exactly 3-to-1. All right? That's just the way the market works. And let's see. If I put on one lot with a 35-pip stop, that means a potential loss of $350. If I'm only supposed to risk 3%, doesn't that mean I can't do this trade unless I have nearly $12,000 in my account? Yeah, absolutely. Maybe it means I need to do smaller lots. Yeah, could absolutely. All that goes into money management. Review disc, I believe it's number 6 or possibly number 5. Coming over from London. Yes. I will have a set of insider code CDs there for you. Question on the candlesticks, a Harami pattern. Remember, a Harami pattern is basically an inside day. Okay, it's all it is an inside day, and what that means, or an inside bar. What that means is, let's try to see if I had a quick example right here. An inside bar means whether it's up or down, it doesn't matter, that you have something that looks like this. Okay, and it could look where this day is up, this day is down. It could be that the first day is down and the second day is up. It doesn't really matter. What's important is that the second bar is completely inside of the first. Okay, that's a Harami pattern. Is a hanging man always an up day? No, a hanging man is more